Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's stories with you. We're starting off with a look at the Indian stock market, where there are some interesting developments happening. Reliance Industries, one of the largest companies in India, has just been given a buy rating by global brokerage firm UBS with a target price of Rs 1750. This is significant because it suggests that UBS believes Reliance Industries has strong growth potential, particularly in its digital ecosystem and new energy segments. But what's driving this optimism? According to UBS, Reliance Jio, the company's telecom arm, is expected to reach a stage of maturity over the next 12-18 months, with mid-teen revenue growth and rising cash flows. The retail segment is also expected to see improved growth, while the new energy vertical is anticipated to start contributing meaningfully to EBITDA from FY27 onwards. Now, it's worth noting that this is just one analyst's opinion, and there may be other factors at play that could impact Reliance Industries' stock price. But it's certainly an interesting development, and one that investors will be watching closely. In other news, we're seeing some shifts in the global energy landscape, with hedge funds and other investors starting to take a closer look at clean energy stocks. This is driven in part by growing concerns about climate change, as well as government policies aimed at reducing carbon emissions. And finally, we're keeping an eye on the Indian stock market's overall performance, where foreign investors have been selling shares in recent months. This has led to some volatility in the market, but it's also created opportunities for investors who are looking to buy into quality stocks at lower prices. We'll be exploring these stories and more in greater depth throughout the show, so be sure to stay tuned. We'll also be hearing from experts and analysts who will share their insights on the latest developments in the world of stocks and finance. So sit back, relax, and get ready to dive into the world of high-stakes investing. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of personal finance and investing. Today, we've got a fascinating tale that combines technology and smart investing strategies. You know how they say, knowledge is power? Well, when it comes to managing your investments, having the right tools at your fingertips can make all the difference. That's why I'm excited to share with you some expert insights on how to get the most out of the Apple Stocks app. Now, I know what you're thinking. Apple Stocks sounds like a pretty basic name for an app, but trust me, it's packed with features that can help you build and monitor your portfolio like a pro. From simple research and reporting to seamless integration across your devices, this app has got it all. Let's start with the basics. The Apple Stocks app comes pre-installed on iPhones and Macs, making it easily accessible for beginner investors. And, as Ilir Salihi, founder of IncomeInsider.org, notes, Apple Stocks app is quite advanced as a research and tracking tool. It particularly stands out by packaging it all in an accessible interface that cleanly aggregates market information. One of the key benefits of this app is its ability to help you stay on top of market news and trends. You can set up watch lists, receive real-time price updates, and even ask Siri questions about your favorite stocks or funds. It's like having a personal financial assistant at your beck and call. But here's the thing. Apple Stocks isn't meant to be a replacement for a brokerage platform or a robo-advisor. Rather, it's designed to be a companion tracking tool that helps you make informed decisions about your investments. As Nikolai Petrov, technology expert from ZontSound, puts it, the app combines market data with contextual news without advertising or hype, which helps for faster decisions. For example, I can set alerts for stocks in my watch list moving 3% or more. In that case, I'll get an alert on my iPhone, Mac, and Apple Watch, letting me check other related news without opening another app or being bombarded with brokerage messaging. So, what's the takeaway? The Apple Stocks app is a powerful tool that can help you take control of your investments and stay ahead of the curve. Whether you're a seasoned investor or just starting out, this app is definitely worth checking out. And now, let's switch gears and talk about another interesting story that caught our attention. It seems that Opendoor, a real estate technology company, has been making waves in the industry with its innovative approach to buying and selling homes. We'll dive into the details of their business model and explore what it means for the future of real estate. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to dive into a fascinating story that's been making waves in the world of technology. You may have heard of D-Wave Quantum, a company at the forefront of quantum computing innovation. Now, I know some of you might be thinking, quantum what? Don't worry, we'll break it down for you. It appears that D-Wave Quantum has been making significant strides in the development of its quantum computing services. With over 100 revenue-generating customers and a notable increase in bookings, the company is certainly gaining traction. However, as with any emerging technology, there are challenges to overcome. The average transaction size may be trending higher, but deals are taking longer to close, and navigating complex procurement processes can be a hurdle. Now, let's talk about the financials. D-Wave reported a second quarter net loss of $167.3 million, which is a significant increase from the year-ago period. While the company has a healthy cash reserve of $819 million, it's essential to acknowledge that profitability might not be on the horizon just yet. As an investor, you might be wondering if D-Wave Quantum is a buy. The answer is not a simple one. With a price-to-sales ratio of 107.3, the stock is trading at a premium valuation. While some analysts estimate explosive growth in revenue, it's crucial to approach this investment with caution and consider it speculative. On the other hand, recent breakthroughs in quantum computing, such as high-fidelity entangling gates connecting remote superconducting quantum processors, demonstrate the vast potential of this technology. As reported by phys.org, these advancements could pave the way for solving complex optimization and data processing problems that classical computers can't tackle. As we conclude today's segment, it's essential to remember that investing in emerging technologies like quantum computing requires a nuanced approach. While the possibilities are exciting, it's crucial to weigh the risks and consider multiple perspectives. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.